Welcome back to Trading Wars and thanks for joining me. All right, guys, 141,000 this past month. What I've been doing is using futures to exponentially increase my gains. And I'm going to tell you right now, I'm using margin and it's a high risk, high reward system. All right. So make sure you do your due diligence before you look into this. But what I wanted to show you is how I quickly check my margin. Okay. So first of all, before we look at that margin, we're going to talk about first how I set up the system. Okay. So let's go ahead quickly here, guys. And we're just going to go over to the chart. So coming off of this chart here, this is the S&P 500. And as you guys may or may not know, every point that the futures contract of the S&P 500 moves, so ES, you're going to get $50 in return. Okay, so 10 points is 500, 100 points is 5,000, etc. Okay, so what I've been doing here, guys, is on pullbacks, I add. All right, and one of the biggest ads I had this year was using this measured move completion. Okay, so I was able to use the Fibonacci to help project the measured move, and that's where I started to buy. And what I've been doing is I've been compounding my risk using my unrealized gains and buying more contracts in a way that is acceptable with my risk tolerance. All right. So make sure, like I said, you do your due diligence. But for me, I like to keep my leverage pretty high because I am recycling my unrealized gains. So if we look here at this chart, guys, one of the things that you'll be able to do quickly is most people will go to the Interactive Brokers website and you can type in E-mini S&P 500 and then you'll see right here the overnight maintenance. So this is your highest maintenance right here. If you scroll up, overnight initial and overnight maintenance is going to be roughly 27,000 at this. So that's to just take on one ES contract. Okay. However, there is also the micro contracts, which I want to show you guys about. So if you go to the micro contracts, you'll see it's 1/10 of that. So 2705, that's overnight. Intraday, the requirement is less because generally speaking, there could be a lot of extra risk holding overnight. One thing I wanted to mention though, that this is dynamic and it changes as the price of futures change. And the way we're able to understand that is if we go back to the desktop application, what you'll see here, guys, is if you look at MES and ES, you could see I have almost 50,000 of unrealized gains here. You'll see if you look at the cost basis and you look at the long market, this is actually what you're controlling here in terms of the notional value of the S&P 500. So if I add these two together, we're looking at about 900,000 in exposure to the S&P 500, right? But that's not what I need to put up. I don't need to put up 900,000. That's the way that margin works. And obviously it's a double-edged sword because when market's going up, you're going to make a lot of money, but you have to have ways to protect yourself. And one of the ways I do that is with maintaining my margin, looking at my margin, and also trimming my profits and lowering my size when the market is not in my favor. All right. So what we can do here, though, what I want to show you. So this is ES. So this is 10 micros. You can see the micros here. So I have 1 ES and 20 micros. So that's 3 full-size ES or 30 micros. So you can right click and you just go to margin impact. All right. So you'll see it right here. It's saying if I were to get rid of this position, I close this position, I'll have a change in my initial margin of 24 grand. Okay. So it's not exactly that 27-ish K that we saw because it's dynamic and it changes. And also we're still during regular trading hours. But if I were to basically close my position, I'll get back this much in my margin that I could use for something else. And that's a easy way to check it. But this right here, guys, this is your maintenance essentially, right? So what I like to do is just round up here. Let's say between 25 to 30K is what you're going to require to hold overnight to have one of these contracts on. Okay. And it's the same thing here. If we look at the MES, you'll see that it's just divided by 10, right? So 2 full size, right around 48,000. Okay. So let's round up to 50K. Okay. To hold those, especially as you're going into the overnight, it changes. Intraday, when you're day trading, it's going to require a lot less. But as the market goes up, you're actually controlling more and more value of the S&P 500. Therefore, the margin requirements are going to be higher. So I hope that makes sense. But that's a quick way that I check. And going back to the chart here, guys, now, 1 second here, guys, going back to the chart here. So you want to always make sure that you are watching your minimum maintenance, okay, looking at the notional. So you have to understand in my situation, I'm controlling 900,000 of the S&P 500. So you have to watch key ratios. One of the things I look at my leverage, I look at my total exposure divided by my notional, and I cap that at 3 times. Okay. And, but that's an easy way to cap it. A rule of thumb is in my head, I always say, okay, if I'm going to trade 1 ES or 1 MES, let's say 1 MES, I want to have at least $5,000 in cash. So that way I give myself some room and some buffer. All right, guys. So I hope that video added value. I love the new Trader desktop. You can easily check your margin requirements and make sure you subscribe and click my links below. And I'm going for a journey here, guys. You can see I'm up close to 500K, and I want to go for $1 million. And I will be using leverage because, you know, I'm comfortable using it. And I want you to follow along the journey, and hopefully you can learn a lot from me. So make sure you subscribe and follow the journey, guys. Thank you so much for your time. And don't forget, you can always check the website out here to check the margin requirements, but I prefer to just go into the broker and right click and show that margin impact. Okay. Thank you very much.